A crisis is quietly unfolding that could reshape the global oil market, and it's happening far from Moscow. For years, Russia has survived Western sanctions by building secret lifelines across Asia, hidden routes for its crude oil, shadow fleets sailing under false flags, and refineries far from Europe's reach. But now, one of those lifelines is snapping. Deep in the Indian state of Gujarat stands a refinery once hailed as Russia's crown jewel abroad, the Vadanar refinery. Capable of processing 400,000 barrels of crude every single day, it was Moscow's backdoor to global energy markets, even as sanctions closed in. Yet today, this massive operation, once producing billions in revenue, is on the brink of collapse. Western sanctions have struck directly at its core, choking off supplies, crippling exports, and driving profits into the ground. The once bustling facility that turned Russian crude into India's energy lifeblood is now gasping for survival. And for both Moscow and New Delhi, the fallout could be catastrophic. This is not just another refinery story. This is the unraveling of Russia's grand illusion that it could escape economic isolation by shifting its empire eastward. Because what's happening in India right now is proof that Russia's global oil network is starting to fracture, and with it, the financial lifeline that's kept Putin's war machine alive. When sanctions first hit Russia after the invasion of Ukraine, Moscow scrambled to find new buyers for its crude. Europe was gone, the United States was closed, but India, hungry for cheap energy, stepped in. Oil tankers once bound for Rotterdam and Hamburg began docking at Indian ports instead. Among the biggest beneficiaries was a company called Nayara Energy, owner of India's second largest refinery, the Vadanar plant. On paper, Nayara was an Indian company. In reality, it was a Russian stronghold. Nearly half of it, 49.1%, belonged to Rosneft, the giant Russian oil conglomerate, while the rest was tied to Russian private equity firms. To Moscow, Vadanar wasn't just a business venture. It was a fortress outside its borders, a way to refine and sell oil through a friendly country, beyond the reach of Western regulators. And for a time, it worked brilliantly. In 2024, Vadanar's numbers were staggering. Over $18 billion in revenue, a profit of nearly $1.5 billion, and full capacity operations at 400,000 barrels per day. Every drop of Russian crude sent there turned into refined products, gasoline, diesel, jet fuel, then shipped around the world. India, too, enjoyed the spoils. The refinery contributed roughly 8% of India's total refining capacity, helping meet domestic demand while fueling exports that brought in foreign currency. It seemed like a win-win for both sides. But beneath this success, the cracks were already forming. In mid-2025, the illusion shattered. The European Union, tightening its 18th round of sanctions, targeted the Vadanar refinery directly. Officials argued that it was essentially a Russian operation disguised as an Indian one, and that allowing it to trade freely was undermining global sanctions against Moscow. Almost overnight, the refinery's support network began collapsing. Saudi Arabia and Iraq, two of its major crude suppliers, cut ties immediately, fearing secondary sanctions. International insurers and shipping companies backed out. Western banks froze payment channels. Suddenly, the refinery found itself stranded. It could no longer access the global financial system. It could no longer secure vital imports. Even neutral nations hesitated to engage. Vadanar's throughput plummeted from 400,000 barrels per day to roughly 280,000 to 300,000. Exports, once at 138,000 barrels per day, fell nearly in half. The refinery's utilization rate, which had been at 100%, slipped to just 70 to 80%. That single number might seem small, but in the oil business, it's deadly. Fixed costs don't disappear when output falls. Wages, maintenance, electricity all remain constant. And as production drops, margins evaporate. Before the sanctions, Vadanar's profit margin was around $10 to $12 per barrel. Now, it's barely $4 to $5, a billion-dollar profit engine reduced to a break-even struggle. This is the silent impact of sanctions, the kind that doesn't make headlines but changes everything. The Vadanar refinery was no ordinary plant. It was one of the most advanced in Asia, ranking high on the Nelson Complexity Index, a scale that measures how sophisticated a refinery's operations are. At a complexity level between 10 and 12, Vadanar could process heavy crude into premium fuels, something only elite refineries can do. This was critical for Russia because much of its crude is heavy and sulfur rich, requiring complex conversion processes. That made Vadanar strategically irreplaceable. Most refineries in Asia couldn't handle such crude efficiently. By controlling a refinery this advanced, Russia ensured its oil could still reach global markets, even when others shut their doors. But this sophistication came with a cost. High complexity meant high dependency on global technology, spare parts, and foreign expertise, all of which the sanctions disrupted. As supply chains froze, even simple maintenance became a logistical nightmare. The very feature that made Vadanar valuable, its complexity, became its Achilles heel. As sanctions tightened, the full weight of isolation bore down. Shipments from Russia grew erratic, as Moscow struggled with tanker shortages and rising transport insurance costs. Without alternate sources from Saudi Arabia or Iraq, Vadanar became entirely dependent on Russian oil, ironically worsening its vulnerability. With declining output came declining exports. The refinery's cash flow dried up, leaving little room to invest or expand. Operational efficiency dropped, and the fixed costs that once powered high-volume profits turned into financial quicksand. In 2024, the refinery's annual profit was about $1.5 billion. By late 2025, analysts believe it may barely be breaking even, or worse, slipping into losses. This wasn't just a setback for Rosneft. It was a financial shockwave for India too. The refinery had supplied 8% of India's domestic refining capacity, meaning any disruption could push local fuel prices higher. The ripple effects are already visible: tighter supplies, increased import dependency, and the threat of inflation in a nation already battling high energy costs. The collapse of Vadanar is more than an economic story. It's a geopolitical one. For India, the relationship with Russia has always been a balancing act. Cheap oil on one hand, Western partnerships on the other. But that balance is tipping dangerously. Washington and Brussels have made it clear countries helping Russia circumvent sanctions will face consequences. Already, Indian exporters have been warned about potential trade penalties. And when Donald Trump announced a 50% tariff on Indian imports into the U.S., citing continued purchases of Russian oil, it sent shockwaves through New Delhi. The message was unmistakable: stay close to Moscow and the economic cost will rise. India now finds itself trapped between two giants: continue buying Russian oil and risk Western backlash, cut ties, and lose access to discounted crude that keeps domestic fuel affordable. But the economics are shifting. The supposed discount from Russian crude, once a major incentive, is shrinking, and the cost of sanctions, tariffs, and lost exports could soon outweigh any savings at the pump. In simple terms, Russia's problems are becoming India's problems. Vadanar's troubles are just one part of a much larger collapse in Russia's global oil strategy. For 2 years, Moscow has tried to build a new energy order centered around Asia, bypassing the Western financial system entirely. But each new round of sanctions is tightening the noose. Tankers are getting seized, shadow fleet operators are being blacklisted, even countries like China and India, once eager buyers, are beginning to question the long-term risks of association. And it's not just about oil. Every dollar Russia loses from exports is a dollar less for its war in Ukraine. Every refinery that slows down weakens the Kremlin's ability to fund its military machine. The Vadanar crisis shows that Russia's energy empire is not invincible. It's brittle, held together by fragile partnerships and risky deals, and once one lifeline breaks, the rest begin to unravel. For Moscow, the fallout is immense. The Vadanar refinery was not just a revenue stream, it was a symbol of resilience, proof that Russia could still operate globally despite Western isolation. Now, that symbol is tarnished. The refinery's declining profits mean fewer dividends flowing back to Rosneft. Its reduced exports mean less foreign currency entering Russian reserves, and its operational struggles send a chilling message to every potential partner still doing business with Russian firms. The cost of association is rising fast. The irony is brutal. Russia built the Vadanar refinery to evade sanctions, but it has become one of the sanctions' biggest casualties. The question now is how long India will tolerate this burden. Policymakers in New Delhi are beginning to quietly reassess. If the refinery continues losing money, or if broader Indian industries face Western retaliation, the pressure to pivot away from Russian oil will mount rapidly. Officials have already begun exploring alternatives: greater imports from the Middle East, renewed talks with U.S. suppliers, and domestic energy diversification. The geopolitical winds are shifting. For India, staying tied to a sinking Russian energy network may no longer make sense. The world's energy order is evolving before our eyes. Russia once believed that its vast oil reserves made it sanction-proof, that no country could afford to stop buying. But what's happening at Vadinar proves otherwise. As new sanctions take effect, as prices fluctuate, and as partners reconsider, Russia's global energy map is shrinking. Each broken deal, each stranded asset, each refinery under strain marks another fracture in a system that once seemed untouchable. From Moscow's frozen ports to India's struggling refinery, the message is clear: the world is closing in. The Vadinar refinery was supposed to be Russia's escape hatch, a shining symbol of defiance against Western pressure. Today, it's a cautionary tale. A refinery that once turned Russian oil into billions of dollars is now fighting for survival. Its output has collapsed. Its profits have vanished. Its future hangs by a thread. And for Moscow, the implications are profound. Without foreign refineries, without reliable buyers, without trusted routes, Russia's oil empire is suffocating. The lifeline that once connected the Kremlin to the global economy is breaking. Link by link, refinery by refinery, deal by deal. This is not just the story of one refinery's decline. It's the story of a superpower slowly losing its grip on the world's energy stage. The empire that thought it could outlast sanctions is discovering the harsh truth: isolation has no escape route. The Russian lifeline has broken, and there may be no fixing it this time.